Good morning, all. Labor Day today. And the US team is not going to be here. So we're going to have a short and sweet, webinar to go over a few things. We just got some news. As you know, Russia has turned off gas supply to the EU. There are some rumors now that the OPEC is going to be cutting oil supply by 100,000 barrels per day, and we've had crude oil jumping from the previous low. Third time that we actually find a low at this 86.50 area. And why is this a significant area? Because as we've said before, it's the equality target, right, of the first leg lower to the second leg lower. So it's a perfect theoretical downside target, although I have to admit that crude was looking like it was going lower after the previous corrective move here, and it might as well still do so, right? But in any case, we are having a rebound today, and I don't know how things are going to evolve during the next few days, few weeks. It's more than obvious that we're going to have a quite tough winter. But I'm pretty sure there are going to be a lot of developments on the way that will affect prices in the markets one way or the other. There's going to be a lot of negotiating under the table, so on and so forth. In any case, crude oil is holding this support for the time being. As you might understand, we have had some data today, but nothing incredible. Let me have a look. We had services PMI, we had composite PMIs in Europe. That was worse than expected at 48.9 versus 49.2, and lower than the previous print, which was at practically 50, right? 49.9, which is neither expanding nor contracting, right? Services PMI did the exact same thing, moved from 51.2 to 49.2, so in contractionary territory. Same thing happened with PMIs and composite PMIs in the UK and services PMI in the UK, lower numbers. We had retail sales coming in weaker than expected, better than the previous one, but weaker than expected at 0.3 positive. Although keep in mind, I've said that a billion times before, right? Retail sales are not, it's not a number adjusted for inflation, right? So when we say we have 0.3 retail sales, that does not take into account inflation. So it's extremely likely, given the number, that people actually bought less things or the same amount of things as they did last month, which was a negative print at minus 1.0%. Just had to pay a little bit more due to inflation. And I remind you, there might have been a very, very short, for the time being, and very small pullback in inflation in the US, but that's not the situation in the EU, right? The EU's inflation is still on the up and up. So definitely, inflation playing a huge role. Retail sales would have been negative again if, as a number, they were adjusted for it. Now, what else did we have? We had Swiss GDP, which came in at 2.8% year on year versus 3% expected. A little bit weaker, but nevertheless, clearly nowhere near any, of the bad numbers we've started seeing around, right? So at 2.8%, clearly, Switzerland is not currently in danger of slipping into a recession. And that's it, more or less. As you understand, there is no real US data coming out today, obviously. Right? The US is in has a holiday, so all the data we had, that's it. What we're getting for today, that's all. We also had, by the way, some services PMI from China came a little bit better, but who knows? Who cares about these numbers? You know what I mean? And services PMI from Japan, slightly better than overnight in Asia, slightly better than expected, but in contractionary territory, and worse than the previous month. We actually went from 50.3, which was slightly in expansionary territory, to 49.5, which is in contractionary territory. So as you see in general, in most cases, the data keep, moving in the wrong direction. Now, having to do with US indices and risk in general, right? It was to be expected. We had an initial reaction higher on Friday, which was completely fake as a move. I mean, it was more than obvious because based on the data and knowing how the markets now feel that the Fed is data dependent, so good news is bad news for equity markets because of monetary policy having less chances of getting accommodative or turning back to more accommodative anytime soon. So the initial reaction higher in equities and lower in the dollar was, of course, fully retraced on Friday, and that was to be expected. That was actually a very, very good move to fade. In any case, we are flirting again. We did that on Thursday, and we held. We did that on Friday, and we held. We're going to be flirting again, later with pre-market, of course. With the 61.8 having to do with the S&P, right, which is at 3,900. Nice rounded level, confluence of support, 61.8 and horizontal support resistance area. So, this is a level to watch. I don't see any real reason why it would hold. It might, it might have held for a little bit. It might hold for a little bit more. But given that nothing has significantly changed, I do think that the path of least resistance remains to the downside, and that we will probably continue lower with risk assets, as we will most likely continue higher with the dollar. Right, the dollar has broken to new highs. As it remains within this ascending channel, the next upside target is the 127% extension of the previous pullback that we had, which comes at 110.56, right, and 109.30, which was resistance for quite some time, should be support from this point forward. And as we've been saying for quite some time, I do think that the next bigger type of upside target is roughly at 112, right? So 110.56 is some kind of a soft resistance, let's say. But in my opinion, 112 is the next real upside target in this technical move to the upside. By the way, as you understand, I'll be alone today, right? I just didn't want to leave you since we've had a few things moving without a webinar. So I'm going to have like 15-20 minutes max. If you have any questions, you can throw them here. There's no interview today, clearly. And for this reason, there's not going to be for our members a morning edge webinar as well today. Let's say we combine both in one, because it's not that I'm going to have something different to say afterwards, and everything resumes. There's not going to be a daily roundup as well, and everything resumes like normal starting tomorrow, right? And just making sure that I've told you. Now, the cable is both the cable and the euro testing, key supports, right? In the case of the cable, we have this confluence of this descending channel trendline support and the multi-year, is it multi-year or is it multi-decade, whatever, it's really long-term low post-COVID that we had just above 114. In the case of the euro, it's not such a key level, but nevertheless, we've been flirting with this 141.4% extension of that move higher, roughly just above 99 cents. Earlier today, we even probed, the ground below 99 cents. And in my opinion, there is really no reason for somebody to be turning bullish here either, right? I think it's technically and fundamentally more likely to see another extension towards the channel trendline support than the opposite, than seeing a rebound towards the channel trendline resistance, which is not unlikely, but I think it's very much less likely to see a break higher than a continuation lower within the channel. So as long as we remain below 1017, clearly just keep looking to the downside. And as I showed you the DXY before, that tells you all you need to know. Now, gold and silver have been, rebounding higher. This is actually, let's say kind of strange. I'll explain. While we have other assets mostly retracing what happened on Friday, the same thing did not happen with gold and silver. So actually they managed to hold on their gains. We've had gold holding again to this horizontal support resistance area that we have, just above 1680, 1685, but still within the context of this descending channel. So, clearly within the context of this correction lower, which has been unfolding now for quite some time, right? It's more than 6 months that we've been doing that so far. And in the case of silver, which is in general weaker, we've had this little rebound, but we're now getting back more or less towards the 1830 area. It was support. It's very likely that it's going to end up being resistance. And I wouldn't be surprised to see another extension lower towards even $16.50, right? In my opinion, these levels start becoming extremely appealing for people that want to load, silver for, having a longer term horizon in mind, right? I think the price of silver is practically impossible to stay at these levels for a long period of time. These are levels that start becoming practically impossible to maintain longer term, because if you take into account inflation, etc., cost of extracting has increased substantially. Demand for silver remains practically stable and good. And definitely with price being there, there's going to be a lot less supply coming in the pipeline. So inevitably, there's going to be a push to the upside purely for demand supply reasons, right? So I love seeing silver pulling even further back. I hope we can even say that 16.5. Not a certainty, of course, but markets can be weird and can be somewhat irrational for a period of time, right? Don't forget we even ended up having that futures contract a few years back that was minus $40 crude oil, right? Crude oil, which a couple of years later ended up being above 130. Just put that in context. Anyhow, please explain commodity currency chart. What do you mean? How many days will you last without gas flows? Any analysis? There are a lot of speculations, and there are also a lot of speculations of how the response is going to be to this type of gas shortages. But I can tell you one thing for sure. It is not going to be pretty. One, there is going to be a lot of political backlash, a lot of backlash to politicians. If you want me to say it in an impolite way, I think it's going to be a shit show. And I think that one way or another, in a way that's probably not going to be that obvious, Europe is going to capitulate to any of Putin's demands, right? Because don't forget that at the end of the day, number one priority for 99% of politicians is to get re-elected, right? And not to be, not to, hold, their values, so on and so forth, if they even have any. Right? The era of politicians like Margaret Thatcher, Ronald Reagan, etc., have long gone. Right? The vast majority of politicians during the past several years are more or less populists, right? In a bigger or smaller extent. Yeah. So I do think that once the ball starts rolling, they're going to find a way to, restore gas supply. They'll give Putin more or less anything he needs as long as it becomes in a kind of subtle way, right? So I wouldn't be surprised at all if they end up sacrificing, Ukraine or whatever, right? So yeah, so I'm assuming that it's going to be an interesting winter in many fronts, right? EU has more supply points than Russia, but it doesn't really matter because it's heavily dependent there, right? It can't cover its needs just from elsewhere, right? So that's all that matters. And don't forget that, people in the Western world are really spoiled. I'm not saying that as a bad thing, right? We've had a very good level of, a very good quality of life. Nobody has ever, really started thinking like, am I going to have heating this winter or whatever? Yeah, some people don't make do so easily, but for the vast majority of families, things like having heating has never been in their lifespan something that was brought in doubt, right? And now we are we're sailing in uncharted territory, so it's going to be tough. Yeah, new pipeline, yeah, but all these type of plans are too little too late. Europe should have made sure to not be so dependent a long time ago, because these type of projects are projects that to bring new supplies and make new to find new partners and get your energy elsewhere and restart nuclear reactors and restart uh, coal facilities and all the things that they've been thinking about. These things do not happen in a flip of a switch, right? That's a big problem. The vast majority of these plans cannot go online at a flip of a switch. So, it's too little too late. There is no way that no matter what they improvise or whatever, they can actually make up for the loss of supplies within the next, let's say, couple of months. And couple of months is probably even a lot, because I'm thinking in Greek terms. We have a very soft winter that lasts very little and starts late. But there are countries that, in a month from now, they're going to be very cold, right? So that we might not be one of them, or Spain might not be one of them, or Portugal might not be one of them, or Italy might not be one of them. But you start going to northern countries, and things get really tough. So I mean, I remember I had my bachelor's party in Stockholm, in Sweden, and it was November, like start of November. I left Greece with we had like 15 degrees Celsius, and I arrived in Stockholm. That was many years ago, and it was like -5. So there was a 20 degrees Celsius of difference between Athens and Stockholm. Do you have an opinion about the Chinese and Russians running Greece's two largest ports? Yeah. Obviously it's not pleasant when you cannot run your own infrastructure properly and you have to sell it elsewhere. And obviously it's even less likable to have to sell it to the Chinese or to Russians, right? But unfortunately, Greek government is so inefficient in running anything that they run massively better than they did. They've actually done quite a good work. I have to tell you that. Of course, I know that there are strings attached to that. Obviously, right? There's no question about it. On the other hand, we've sold exactly. That's what I want to say. But Ingmar beat me to it. We've also sold to Fraport, that belongs to Germans, as Ingmar is saying, the airports, which is also a great thing. You can't imagine how much airports were upgraded following that. Yes, we had a very beautiful and nice airport in Athens, for example, and a couple more, but all other smaller airports were like in terrible condition for a European country in of the age of 2020, roughly, right? Because that happened a couple of years ago. And they've really done a wonderful job upgrading and managing them properly, right? In the in the standards of private sector, because Greek public sector is not far away from what you would expect from the Soviet Union, unfortunately. So yeah, Fraport was a good thing, a blessing. If you ask me, definitely a big upgrade for tourism as well, because it's important, right? Somebody travels to Greece and the first thing they come in contact with is the airport. So inevitably, it builds the image or destroys the image of your destination for tourism. I mean, it's nice having beautiful islands, but it's also nice receiving people in a proper airport. Yeah, Italian airports are terrible. That's more or less how the Greek airports were as well prior to Fraport, Ingmar. Anyhow, conversation went out of hand here. A couple of more things. Use the yen continues to the upside, right? We've already broken to multi-decade. Is it also multi-decade here? I think it's multi-decade highs. And the next upside target, this chart, as you see, looks very similar to the DXY if you look shorter term, right? Next upside target is at 141.85, 84. Clearly, we remain in bullish mode. Support from this point forward at 137.60. Keep looking higher, right? Nothing has significantly changed here. If you look at US 10-year yields, you'll notice there is a divergence, right? We've talked about it before. They have broken out. They do look bullish, but clearly big divergence in the sense that we're currently at the 78.6 of the previous move lower, while USD yen is pushing new highs, right? And the DXY is pushing new highs as well. So there is a divergence, but nevertheless, that doesn't change the fact that we had talked about this corrective move lower, and that once we broke higher, that would have been a bullish development. And indeed, we've broken higher, and we've already produced quite significant follow through, and not unlikely to see new highs as well. But clearly between USD yen and US 10-year yields, for example, which in general are generally very, very well correlated. Again, more rumors that OPEC are coming through, that OPEC Plus says chairman to consider calling for an OPEC and non-OPEC ministerial meeting anytime to address market developments if necessary, and more rumors that they have agreed, but it's still in a rumor level. that they have agreed to an oil output cut in the size of 100 BPDs. Okay, let's see. It's not a huge cut, right? Let me be clear. It's not a huge cut. It's mostly the move that scares the markets, right? Cutting 100,000 barrels per day is not huge in, in terms of supply demand, but is definitely sending a signal. I think that's what the market reacts more to than the size of the cut itself. Because, they cut now and, the market is, of course, a forward pricing mechanism. Things like, okay, is this, the first move of something bigger to come? And, knowing how the situation with gas is now as well, you understand the combination of things is, is quite scary, right? Speaking of gas, let's have a look at the gas, which is probably, this is not a European gas, by the way, right? Just saying. Probably building a pennant here. So looks very likely that another leg higher is in the cards here as well. Keep that in mind. Alexander says, I think the Lisbon airport was considered one of the worst airports in Europe. I have no idea, mate. I've never ever traveled there, ever. So no personal experience whatsoever. Okay. So I think we're going to wrap it up here, since, as I said, it's not more or less an official webinar today. Theoretically speaking, we wouldn't have any webinars today, but we did have the flow show, a short and sweet F.A.C.E webinar today as well. And that's it for today, having to do with webinars. Starting tomorrow, everything goes back to regular. So I wish you all a wonderful rest of the day. And you'll hear from me again and the rest of the team, of course, tomorrow. Bye-bye.